Hey, what's up everyone? Happy New Year. My name is Charles and welcome to my YouTube channel, the channel where I document my journey to $100,000 by the end of 2021 by swing trading the stock market, starting out with just a little over $300 in my Webull account. Yesterday was January 8th, which was milestone number 4, and sadly, I did not make my anticipated amount of $833 for this milestone according to what my spreadsheet says I should have by this time. Currently, my account is just over $748. In today's video, I'll first go over what helped my account early on in which I saw huge gains. Second, I'll go over exactly what went wrong. And finally, I'll go over what I need to do to get back on track. So if this sounds like you and you're just starting out, or you're thinking about starting out but don't want to make the same mistakes I made, stick around until the end because I think this will help you out a lot. And if you find value in this video, please do me a huge favor and hit the like button below. It would really help out my channel. And please consider subscribing so that you stay up to date on my progress. And remember, I'm not a financial planner or a licensed professional, and so the information provided is for entertainment purposes only, entertaining you in my journey to $100,000. Now let's go make some money. When I first started my account, the EV space was already hot with NIO, XPeng, and Li Auto starting to take off in China. My very first swing trades included NIO and XPeng. I was in other swing trade plays also at this time that did also well, but those two were the biggest. I bought 7 shares of NIO at over $27 a share and then sold them at just under $39 a share for a profit of about $72. Then I bought 4 shares of XPeng at just under $37 a share and then sold 3 of them at just over $72 a share, and then later the 4th share at just over $60 a share for a net profit of $130. So a total profit of just over $200. Not bad considering I started out with just over $300 in my Webull account, and then disaster started to hit when I started making bad trade after bad trade. I go on YouTube a lot to find information on swing trading and to get ideas on what stocks to buy, and I think YouTube is a great place to get ideas on stocks to buy, but you really have to do your homework, or what most people will say, your due diligence, before buying any stock. Aside from doing your due diligence, there are at least 2 things you need to be aware of when getting stock ideas from YouTube. The first one is that YouTubers who are pushing certain stocks may have a totally different investing strategy than yours. They may be pushing stocks like Apple, AT&T, or Coca-Cola because they are buy and hold long-term investors who enjoy the dividends from owning these companies. Or they could be pushing penny stocks looking to day trade them, especially when a particular catalyst will be coming out the next day that will send it to the moon. The thing is, you need to really understand what type of trader / investor you are before buying into any of these stocks they are recommending. The second thing to be aware of, and this pertains more to those who are day traders if this is you, is that just know that once you see videos of YouTubers pushing certain penny stocks, that it's probably too late to establish a position in those stocks because they may already be at a high or have already ran up and are already on the way down. My investing strategy is to swing trade the market, in which swing trading is loosely defined as buying and selling within days or even weeks of having bought stocks. Day trading is loosely defined as buying and selling within that same trading day. My mistake was that I was buying penny stocks that were already too high because, I saw it on YouTube the night before, right? Missing that one important trade for the day because of the catalyst, only to hold on to them for days and even weeks with them never getting above the price at which I bought them at. And of course, I'd sell them at a loss to stop the bleeding. My other mistake is that I constantly have been buying stocks to swing trade that were already too high. I got lucky with NIO and XPeng because they kept going up, others not so much. In general, stock prices follow an oscillatory path where they swing up at a certain high, come back down and bounce off the 20-day SMA line, then they go right back up. Because of FOMO, the fear of missing out, again from watching YouTubers pushing this stock and that, I would buy when those particular stocks were already high. And the danger of buying stocks when they are at these new highs is that you'll never know what's going to happen next. It could either continue to go back up, dip back down and bounce right back up, consolidate or trade sideways, or go back down and even blow past below the 20 SMA line. Because my plan calls for buying and selling within 2 weeks, hoping that I make at least 22% profit when I do sell in order for my plan to work, a lot of my swing trade plays never make it to 22%. I either end up making some kind of profit or I sell for a loss. That leads me up to where I am now with my account sitting at just above $748. Now say if I waited 3 weeks, a month, 2 months, would I have gotten my 22% gains? Probably, but then I'm almost guaranteed that I won't make my goal to $100,000 by the end of 2021. In order to correct my mistake, I first had to remind myself that I'm a swing trader and that I must buy only those stocks that meet my financial goals. Sure, it's possible to swing trade any stock, but if they don't meet your goals, then don't. Focus only on those that do and forget about the rest. So then you might be asking, how do you find stocks that meet your particular goals? That's where stock screeners like Finviz come into play. Alright guys, so here we are at the Finviz Screener that I was talking about. And the way to get to here, get to this website is basically type in www.finviz.com. And when you do, it'll take you to this, this main page here. And what this page shows you, it just basically shows you a bird's eye view of how the market is performing at the time that you log, or at the time that you get to this website. What you see here is you have your three major indices along the top: your Dow, your Nasdaq, your S&P 500. And in this portion of the site, you have another bird's eye view of how the different sectors are performing. And in this part of the page, you have the market broken down even further as to those stocks that are doing the best at the time. You have your top gainers, those stocks that are hitting new highs, as well as those stocks that aren't doing the best. You have your top losers and your stocks that are hitting new lows. And to get to the screener, you just go ahead and click on this tab here. And before I go any further, I just want to say that because Finviz is a free tool, you don't have to create an account, although you can, in which if you do create an account, it'll unlock more features that are available to you as a signed up member. But from what I've seen so far and what I've seen on YouTube, the free version should be more than adequate to do the searches that you need to do to look for those particular stocks that you may be interested in for. Yeah, like I mentioned, that because this is a free tool, you get a lot of these pop-ups, so just exit out of them. Yeah, they get annoying from time to time, but just exit them out, just to free up some space on the screen. So here we are on the screener. You have the screener page broken up into 4 tabs. What I like to do is click on the All tab, and what that does is that it shows me all the filters that I can choose from to be able to filter out the stocks that I may be looking for. And before I set any of these filters, at the current moment, you can see that there are 7,577 stocks before any filtering is done. So say, for example, you're looking for stocks that are only traded in the Nasdaq. If you click on that filter, you can see that that value is now pretty much cut in half to 3,328. And you can filter that even further by saying, okay, you only want stocks that are traded on the Nasdaq, but are also part of the basic materials sector. So when you do that, it now boils down to 44. So this becomes a little bit more manageable list to look through if you're looking for stocks that trade in the Nasdaq and that fall under the basic materials sector. So I'm still pretty new to this. I'm trying to learn as much as I can on YouTube. There are a bunch of YouTube videos out there that show you how to use stock screeners if you want to get a lot better at that. There are certain filters that you set if you're looking for stocks that fall under the high growth, stocks that fall under the value stocks, stocks that you are looking for to do day trading, and ways to set filters for stocks that you're looking for to do day trading. So there's different combinations that you can set these filters for to look for those particular stocks that meet your investing / trading style. So like I said, I'm still learning on how to use this. And so I encourage you to do that as well, to go onto YouTube and search out those different YouTube channels that show you how to use the Finviz stock screener. All right, so I just want to touch upon some of the concepts that I talked about, how a stock's price has an oscillatory type movement. And so I pulled up the chart for Apple, ticker symbol AAPL. And so just wanted to go over what the chart looks like. So this line that you see here is a purplish colored line. That is called the SMA 20 line. And the line below it is SMA 50 line. And the line below that is called the SMA 200 line. I know it's kind of hard to see, but if you pull up the Finviz screener and look up the ticker symbol AAPL, you can see just exactly what I'm talking about. And then so here is the oscillatory type motion of the stock price of Apple, and as you can see, so here again is that 20 SMA line. You can see that it follows closely that line. And so starting from around here, around May, you can see that the price is moving up. Then it hits a certain high. Then it starts to go back down again towards that SMA 20 line until it goes back up again. And here, when it hits this particular high, it doesn't want to go any higher or any lower. So this path that it follows is basically what people would say is trading sideways, or is consolidating until it starts to move back up again, and then it starts to reach another high until it starts to go back down again. And what I mentioned earlier is that the dangers of buying stocks when they hit, when you buy stocks at a high, is that you don't know what it's gonna do next. Whether, like say in this case, if it's gonna trade down, or if it continues to go back up, or in this case right here, if you were to buy at this high, it started to go down towards the SMA 20, but then it actually goes below past that. And so that is one of the dangers of buying a stock when it's already at a high. You just never know what it's going to do next. In this case right here, it just continued to go past the SMA 20 line towards the SMA 50. And when it starts to do that, you really need to start being a little bit concerned as to what the stock price might do next. If you're a long-term holder, it doesn't really matter, because you can see that it just continues to go up. But if you're like me, looking to swing trade Apple, for instance, if it goes past the SMA 20, then you're going to have to start to worry that is it going to continue to go down even further. Look at this example right here. If you were to buy at this high, and it starts to go back down, it touches the SMA 20, but then it continues to go below it, trades a little bit sideways, but then it continues to go down past the SMA 50 line. So if you were to buy here, and you see that it continues to go down, you're definitely lost money at that point. So that's just wanted to give you a brief example of how a stock price can trade. Like I mentioned, my problem was that I'm looking to swing trade stocks within 2 weeks, because according to my plan, if I could find stocks that I could swing trade within 2 weeks, hoping that it would get me to 22% gains, then I should be on track to meet my goal of $100,000 by the end of 2021. But if say, for example, I did buy Apple, I bought here and sold here, assuming that this represents, just for the sake of example, if this span here represents 2 weeks, well, I've definitely lost money. So that was pretty much the story on the past few swing trades that I've made where I bought the news, bought the hype, as some people would call it. I bought it at a high and ended up selling it at a low just because I needed to stop the bleeding so that I could move on. So just you know, search up some YouTube videos on stock screeners and how to read charts, because it'll give you a better idea on when to enter into a position. Because definitely you don't want to buy at a high, because like I said, it could just continue to go lower. And also you can find out information on when a good time is to buy by looking at the trend on how the stock price is moving. Well, that's it for now. Make sure to watch out for my next video for milestone update number 5, where hopefully I have learned how to use Finviz to make better swing trade plays for much better results. See you next time.